Hi, everybody. Welcome to Stop Being Sold, a community of informed consumers who are sick and tired of being sold financial products that they don't understand or need. So if you're tired of being a transaction, go ahead and hit that notification bell and also the subscribe button so that you never miss another video from us again. How are you today, Brian?
Hey, doing great, Michelle. How about yourself?
I'm doing good. Thank you so much. So today's video is an interesting one. We're going to be talking about selling your life insurance policy, otherwise known as, I know, right, as a life settlement, which is just basically the sale of a life insurance policy by the policy owner to a third party. And I know there are a lot of people, until you and I had this conversation earlier, last week, I had no clue this was even a thing.
Yeah, hard to believe, Michelle. Most people still don't know it's a thing. How long it's been in play? Well over 100 years now. And it's a very common product being sold right now. So,
that's the one thing doing our videos. We've done a lot on annuities, whether it be variable, fixed, MIGAs, whatever, or even just some of our life insurance videos. It's amazing what's possible in the world of insurance contracts.
It is, Michelle. And when it comes to these life settlements, it's kind of morbid thinking that somebody else could actually own your policy, your life insurance policy, right, and they get the benefit when you die.
Right.
Kind of scary sometimes. So.
All right, so I just basically gave the definition. It's a life settlement, which is what we're talking about, is the sale of an insurance policy by the policy owner to the third party. Right. So what is that, like, what else do we need to know? Or is that the definition?
That's basically the definition. You're basically taking your life insurance policy that you may no longer need, no longer want, whatever the case may be. And we'll get into some of the reasons why people sell their policy. You're selling it to a third party. Third parties, Michelle, could be businesses, hedge funds, whatever it may be, that they're in the business of buying your life insurance, because we all know that one day later, sometime later in life, that we can't predict that date, we're all going to pass away.
Right. Death and taxes.
That policy will come due.
Yeah. Death and taxes are the two things we know are for sure in this entire life, right? So the third party buyer then will continue to pay the policy's premium, yes, and then collect the death benefit when you die.
When you die, they make the payments going forward. They pay you X amount of dollars for your policy. And we'll go through that as far as how that process actually works. And then when you pass away, they collect.
Okay. All right. So where I hold a life insurance policy right now, where can I sell it? Let's start there.
There's life settlement companies. And through this video, we'll talk about them as a provider. Okay. So they're the company that's going to buy it. Or also, Michelle, through a broker. There's brokers that promote this all day long and that receive a commission for selling it to a settlement company. So they're like a middleman in there. So there's a lot of people that make money off of this. There's a lot of online sites that you can go and research to where you can calculate what your policy might be worth. So there's a lot of information out there.
We're not talking about selling this to your brother. We're talking about selling this to third, like these providers.
Right.
Okay.
But a third party, Michelle, could be virtually anyone.
So it could be anyone. Okay. Yeah. All right. So these are completely legal and have been happening for 100 years?
Yeah. So it's funny because it sounds like it wouldn't be legal.
Right.
Okay. And that's a common misconception of life settlements. Yeah, this has got to be a scam, right? Because you see it on TV all the time. I can sell so you got a senior on there, and I always use the seniors in the imagery. And someone said, I can sell my life insurance policy? Yes, you can. And it was made legal, Michelle, in a 1911 Supreme Court ruling that life insurance policies are just like a piece of property. So like real estate that you own, and you can transfer it to a different owner, kind of like selling your home, right?
Okay.
And this is a very heavy regulated industry. So it's out there.
The insurance industry is.
Yeah. Well, even the insurance industry, but the life settlement industry is heavily regulated because of the potential of fraud in this product. So.
Okay. Well, then here's my next question. Talking about regulation and being a heavily regulated industry, how does this work? Like, what are the rules, regulations, and what do people need to know surrounding life settlement?
Okay. Pretty simple, basic. You need to be old enough or sick enough for investors to be willing to take on the risk of buying your policy. What they don't want to do, Michelle, is buy your policy from you at the age of 50, because your life expectancy could be 85. That's 35 years. That means 35 years of paying premiums. So most companies will require you to be at least age 65 to sell your life insurance policy. But the average age of people that do life settlements is 75.
Okay. So you have to be at least 65, but average age is around 75.
Right. There's some companies that will take it that's younger, Michelle, but they want, again, like I said, you got to be old enough or sick enough. So
Okay.
if you have issues, health issues, at that time, what they're looking for is to take advantage of you possibly dying sooner,
Okay.
It's kind of morbid. It's really morbid what we're talking about here, but there are some huge benefits to this. So.
Okay, so what about, so we've talked about age, health status. What about, like, how much are you getting paid out? Like, how does this work in terms of, like, what exactly are they buying?
Well, okay, so here's how the whole process works. It's broken down into 3 sections.
Okay.
Eligibility,
Mm-hmm.
offers, and a closing. Now, it's called life settlement. So the closing section of it, when the transaction is finished, is called the settlement. So
Okay.
let's break them down, and let's start with eligibility. You got to qualify for a life settlement. And now, do you qualify for a life settlement? Here are examples of who qualifies for life settlements with most companies. And Michelle, this is not just based on your health, okay? So one of the things that they look at is your age. They
Mm-hmm.
want you to be at least age 65. Again, the national average is 75.
Right.
Because
Okay.
you're what? Closer to dying.
Right.
That means closer to paying out the death benefit to the third party.
Okay.
The second thing they look at is health status. Traditionally, life settlement companies look for someone who has had a change in your health status since the original policy was taken out. So maybe you have heart issues now, or you've been diagnosed with some form of cancer and have recovered from it. That's a major change in your health status, and it could affect how much you receive for it. But you don't have to be sick to qualify for a life settlement. The older you are, the more that these companies will step in and buy your policy just because they want it. So,
Okay.
then it goes down to the face amount of your life insurance policy. Most companies require at least a $50,000 death benefit on your life
Okay.
for you to qualify. So they don't want no small $5,000 policy, $10,000, a burial policy. They want a true policy that they can buy with enough benefit for it. And who was it? I seen an average policy that's being bought today is over $1 million. So they're buying a lot of policies. And then it comes down to, Michelle, also the type of the life insurance policy. Okay. So we've got universal life policies. We got whole life policies. Now, them are permanent policies.
Mm-hmm.
Now, Michelle, do you think someone would buy a term life insurance policy?
Probably not, but I don't know.
Well, because it's set for a period of time, right? Like a 10-year.
But if you're old enough, will they?
Well, no. And here's why. The traditional term policy that expires. So let's say you buy a policy at 65 and it's a 10-year policy, it's good till 75. Well, if you live to 80,
Right.
The third party is not going to take that risk. So, but do they buy term policies? Yes, as long as the term life insurance policy has what's called a conversion feature. That means that anytime after that policy is written, the owner of that policy, can convert it to a permanent policy at your original health status.
Okay.
I have one of these policies. I have a term life insurance policy for 25 years that has a conversion feature. So anytime in that 25-year period, Michelle, I can convert it to a permanent policy at my preferred status.
Okay.
I could be 70 with heart issues, had cancer, whatever it may be. The insurance company has to convert my policy to a permanent policy at the preferred rating, meaning my price will always stay lower. That's what one type of policy that these people are looking at. So if you have a term policy, make sure that you understand this and that can explain this policy to the life settlement company if you're looking at buying or looking at selling the policy. So,
all right. So what else falls under eligibility? We've talked about age, health status, face value of the account, correct? It needs to be a minimum
type of policy.
50,000, type of policy, and what else is there?
Hard to believe, but the state that you live in. Now, life insurance, insurance companies are, what do I want to say, rated. They're under regulation per state that they do business in. So some states require that you own the policy for a minimum of 2 years before you can sell that policy. A few states, now this is a huge benefit to you as the consumer. A few states mandate that an insurance company notify you that you may qualify for a life settlement instead of surrendering your policy or letting it lapse. Who do you think that upsets, Michelle?
Well, the life insurance companies.
Exactly, because most term policies are written with the expectation that they will lapse in the future.
Right. Okay.
All right. Huge.
Okay. So is there anything under eligibility?
No, that covers the basics of almost every type of policy there is.
Okay. So let's move on to offers then.
Okay. Now, once you determine that you've qualified for a life settlement, now it's time to find your best offer. Like we talked about before, you can find a life settlement provider or a broker to get the best offer. Okay. Now you're going to have to give up some information. You got to release some information to these companies for them to make you a verified offer. This could include, you may have to take an application. With a broker, it'd be an application that they submit to multiple people out there. You may have to provide your medical history and provide your policy information because it goes back to the type of policy you had. They want to make sure that, number one, that they want to check that you qualify and they want to give you the best offer possible. Now, note here, some companies could require a complete medical underwriting to get your best offer. That's okay. If your goal is to sell one of these policies, you want the very best that you can get out of it, right? So, giving up a little bit of medical information or have to go through maybe a heart test or whatever it may be, that's just the cost of you selling it so they can get the best offer. Once all this information is received by the provider or the broker, it may take from a few hours. If you're super healthy and nothing has changed in your health and you're just 75 years old and you want to sell that policy, they can come up with an offer pretty quick for you. But if they're going to have to do medical underwriting, this, that, and the other, it could take
longer.
Several weeks.
Right. For sure.
Just like getting a life insurance policy. So it could take up to several weeks to get a firm offer, which is okay because you want the best that's available.
Okay. So that was offers. Now let's go on to the closing.
Okay. This is where is also considered a settlement. Okay. Now we're at the end. Okay. You've got an offer and you've accepted it. You now have to complete some closing documentation. And it kind of reminds me of, okay, I sold my property. I got to close all them loan documents, this, that, and the other. Kind of like you're sitting with a title agency, right? This will be done with the life settlement company or with the broker, if that's who you're working with. Once this part of it is complete, Michelle, the funds will be placed into an escrow account until your life insurance policy is transferred to the new owner. That's it. It's said and done.
Said and done. All right, so we probably should have covered this at the beginning, but I mean, there's no time like the present. Why would anyone want to sell a life insurance policy? Like, what are the different, I guess, what comes to mind is I'm sick and I need the cash now.
Right.
But let's go through some of those reasons why people would want to sell their life insurance.
Yeah, you know, Michelle, there could be a multitude of reasons, but the most common ones are you're older, you're unable to afford the premiums. Instead of letting your policy lapse and be canceled, you can sell your policy. A life settlement on your policy could end up getting a cash payment from one of these investors that could help you with your normal day to living expenses. So
can we stop really quickly on that note and give an example? So let's say I have a policy that's, I don't know, $500,000, right? What we know about life settlements is that I'm going to sell it to a third party, and that third party will then continue to pay the premiums on it until I die. And when I die, they get all of it. So if it's for $500,000 and I want to sell it, I'm getting that $500,000?
No. You're going to get a percentage of that amount. Because think about this. If you're going to let the policy lapse and be canceled, what are you going to receive?
Nothing.
Absolutely nothing.
Right.
Okay. So you get a percentage, and the average could be anywhere from 8 to 20% of the face amount. So
all right. So let's make it easy. If it's $100,000,
you could get around 20,000. Okay. Or up to 4 times. I've seen 4 to 5 times what the cash value of your policy is, so that you can cash out and run away with. So it all depends. And the part we just went through, and I'm glad we went through that first, is because the underwriting side of it, they've got to qualify you for
you have to be eligible in order to be able to
get the best
an offer
bang for your buck. They want to understand it. So that is one reason. Maybe you're unable to afford the premiums. And let's say your premiums, Michelle, on that $500,000 policy was $150 a month. And you say, you know what, it's really cutting into my budget. I just don't need it anymore. I'm okay. Well, then you go to sell it. And for that $500,000, let's say you're age 75 and you're unhealthy, you might get $200,000, $300,000 out of that policy. The sicker you are and the older you are, the more you're going to receive. It's
right. Okay.
And
because they know they're banking. Right. Exactly. As an investor, you know that time is ticking and you will recoup your investment. Okay. So what are others?
Let's take you, for example, Michelle. Let's say you, here's another reason for choosing life settlement. Let's say you no longer need your policy.
Yeah.
There may be a time when the reasons for having the policy doesn't exist anymore. Right. So families.
So why keep paying on it when you can sell it to somebody cashed out?
Sell it, get some money back. Right.
Okay.
Or another example is in case of an emergency. In the cases where unexpected event rises, like you mentioned earlier in the video, talking about death or an illness in the family, you may need to sell the policy for cash to cover some of these expenses.
Right. Okay.
And let's take one more. This is one that's pretty common in the life insurance industry, is key employee insurance policies held by a company on either the executives or a partner. So why do you get rid of it? Maybe you're no longer working for that company. So what's the reason to keep paying for that key employee insurance policy? Sell that policy. By taking a life settlement, the company can cash out on that policy that's no longer needed and put the funds back into their reserves. Or let's say you were replaced by another executive or another new partner. Maybe open up a new life insurance policy, use the funds from that to offset a new policy.
All right. Anything else under why someone, I mean, we went through pretty much all of it. The money, the
biggest one is the money.
The money. Yeah.
The amount you receive from a life settlement is going to be far more than what you would receive if you surrendered the life insurance policy. And Michelle, while I was thinking about this, I read through my policy just to give you an idea, and I want you to listen to these numbers here. So my policy right now, I'm paying roughly $214 a month for this policy. Okay.
Okay.
It is a $750,000 policy.
Okay.
Okay. And I figured out I paid like over a 25 years period, I'm paying $65,000 in premiums. Okay. That takes me, Michelle, to the age of 75. I don't need that policy at that time.
Right.
Because I'm in retirement, and at 75, I'm in retirement, or this, that, and the other. Well, anyways, if I'm 75 years old and I got a $750,000 policy that I've only got $65,000 invested into that policy, if I can get 25% or even 20% of it, that's $150,000 on an investment of $65,000.
You paid back what you put in and you've made more. Yeah, I understand.
So, and that's for a term policy.
Right.
And people, when you sell term life insurance, one of the biggest complaints consumers have about term life insurance policies is, at the end of term, I have nothing left. This fixes that. So you could use this as an investment, as a retirement alternative, as to supplement your income once you get to retirement.
Sure. Yeah. I mean, it's a strategy. It's definitely, it's really interesting because, you know, you never think well, not you, me, never really thought about, life insurance. Okay, we know why you get it and be responsible and do all the things. But, you mentioned like some people sell because the policy is no longer needed.
Right.
And that's just a different way of thinking of life insurance. It's like, oh, I'm going to get this to cover my butt. But it's also, I mean, this is a strategy and in the bigger picture to make sure you're taken care of financially.
Right. So think about that when you go to buy a life insurance policy today. Make sure you watch this video and come back, save this video and come back to it before you buy a life insurance policy. So because people that buy term, they just don't, it bugs them that, oh my gosh, I paid for all this money and I get nothing back. Yeah. Well, if you buy the right term policy
with the conversion
feature, you may be able to receive some of your funds back in the future, which is a huge selling point. So why would, I was asked at one time, well, why wouldn't everyone do this?
Yeah.
The problem is, Michelle, most people don't know.
No, they don't know. I had no clue. I mean, seriously, until last week that you could sell a life insurance policy at all and that it was completely legal. And they've been doing it since, what'd you say, 1911?
1911. Michelle, I actually have two life insurance policies. One I bought it with the intention of knowing that I'll never use it.
Right.
If God forbid I pass away before I hit retirement, at least it will pay for my estate. It'll go to my estate. But when I get to retirement, I look at that policy. It's designated as extra retirement coming into me. Right. So that's why I bought that extra policy.
Fantastic. Well, thank you for this. This has been a really good video. If you're watching and you like this content, please give it the thumbs up sign or hit that like button so that, other people can find videos like this and also to let us know that you're enjoying the content we're producing. Thank you so much, Brian. I really appreciate you walking us through this.
Thank you. Thanks, everyone.
Thanks, everybody.